So we have indicated several times that we always write a report as the end product of our assurance engagement. Last class, we discussed assurance engagements and non-assurance engagements. And with regard to reasonable and limited assurance, we said we are forming an opinion. We are forming this opinion in a report. We are forming this opinion in a report. Plus, it's the ultimate product of an assurance engagement. It is the ultimate product of an assurance engagement. There's somewhere else when we are discussing evolution of audit, the early audit and contemporary audit. We even went further to discuss the expectations gap. One of the points under expectations gap, we said, general public think that unqualified report is a bad report. Qualified is a good report. You remember that point? Then we said the opposite is true, that unqualified is a good report, qualified is a bad report. So I would like us to look at reports. Auditors report. Auditors report. So we say that this is the ultimate product. This is the ultimate product of any assurance engagement, yes? Then it is a Companies Act requirement. Here's a Companies Act requirement, and it is one of the auditor's duties. It's one of the auditor's duties. It's one of the auditor's duties. So the auditor is able to report, yes. The auditor reports, Roman number 1, whether books of accounts have been presented fairly, in all material respects. Also, he reports whether he received all the information and explanation deemed necessary for the purpose of audit. Yes, he also reports whether he received sufficient returns from the branches that he never visited. Then, very important, reports whether the book of accounts portrays a true and fair view. Elements of an auditor's report. We have those 10. Management responsibility. Just to finish up writing, then I explain all those components. We get right toward the YAL. What they capture and so on. So we are saying the auditor's report is the ultimate product of any assurance engagement. It is a Companies Act requirement. It is one of the duties of an auditor that he prepares a report. And in this report, he will indicate whether the books of accounts have been presented fair in all material respects. That everything pervasive, everything significant has been recorded, that he has received information and explanations that he expected for purpose of audit. You seek lots of evidences from internal sources, external sources. Did you receive all that which you expected? You need to report that. Whether you received sufficient returns from the branches that you never visited. Because of time constraints and cost constraints, auditors will always sample. If the client has got several branches, like Naivas, to the tune of 90 branches, you may not be able to visit all the branches. Yes, you visit a few, then others have to send you some returns. So you're reporting whether you received sufficient returns from the branches that you never visited. Then you're reporting whether the books of accounts portrays true and fair view. Then in your report, you have these elements: title, addressee, introductory paragraph, management responsibility, auditor's responsibility, opinion paragraph, other legal matter, auditor's signature, auditor's address, and date. I want to explain what exactly we capture here. Title is very important. We even talk of anytime we're writing any other report, it must have a title. Yes. What this title does, it distinguishes the auditor's report from any other report. Because we always write up there, independent auditor's report to members of KCE College. So there's clarity what type of a report we are writing. I take it again, independent auditor's report to members of KCE College. So you can't confuse it with director's report, chairman's statement, internal auditor's report. It's very clear to whom you are writing to. So it distinguishes your report from any other. Addressee, who are the intended users? So there you write ordinarily or fundamentally to the shareholders. Under the stewardship and agency theory, we saw that we report to the shareholders. So you indicate, if you're writing to anyone else, then you capture them as addressee, so that any other person who uses it, and they are not part of the addressee, they are doing so at their own risk. They are doing so at their own peril. Ni ile kwa sheria tuliita vorent non fit injuria, vorent non fit injuria, voluntary assumption of risk. Kwamba barua sio yako na wewe kushaisoma. So any repercussions, yes, ni kujitakia at your own peril. So any other person who may suffer loss and they are not the intended users, the auditor can always defend them. They can always defend themselves that they used it, yet They were not the intended users. Ni kama tu mtu ashike simu yako alafu aanze kukuuliza maswali, huyu ni nani, sijui nani aliandika nani. Hiyo simu ni yake. Yes. Kwa nini? Kwa nini? Simu yako. Sio message, ni mwenye simu alitumiwa. Sasa mwenye sio mwenye simu anatokelezea wapi kuuliza maswali ya hiyo simu? Yes. Yes, ama karibu mwenye simu. All right, I was just giving an example. Yes, karibu watu wasikie violence because yes, yes, watu wanakuulizaga. Yes, kwanza inakuwa bahati mbaya unamwambia aone picha yenye mlipigwa job. Sasa hiyo message inaingia. Yes, na huyu nani? Yes. Addressee. It's intended for that person, any other person who uses this report at their own risk. Then, introductory paragraph. Here, we introduce the client, we indicate the name of the client, we introduce the books of accounts that we are auditing, we even indicate which year these books cover. So, utakuta, we are saying that we are auditing KCE Limited, we are auditing income statement of financial position, and cash flow. And cash flow for the period running from 1st January to that 1st December 2022. You indicate this in the introductory paragraph. You are introducing the client, introducing the records you're auditing, and even capturing the period covered by this subject matter. Period covered by this subject matter. These two paragraphs are very important. Some books will call them scope paragraph. Some books will call them scope paragraph. Again, remember where we discussed the expectations scope paragraph. We discussed the expectations gap and we said it's about misconception. So what we do here is clearly indicating what is expected of management. Actually, the auditor's paragraph is the wrongest in the auditor's report because we indicate step by step how we will carry out the audit to avoid any misconception. We always start by saying we will assess the strength or otherwise of ICS. We will gather evidence guided by strength or otherwise of ICS. We may place reliance on the work of an expert. We may place reliance on the work of internal auditor. We may even place reliance on your controls. We will require you to prepare for us management representation letter. At the end of the audit, we indicate everything. And that's why auditor's report is always prepared in advance. It is one of the standard documents. Later, we'll be discussing working papers, and we'll say we have some standard working papers which the auditor prepares in advance. You only change a few things. You have a template because the title will remain the same. Maybe you change the members. Addressee you change. But the management responsibility is the same. Auditor's responsibility is the same. Other legal matters is the same. Your addresses are the same. So we always have it in soft copy. So you only change those things that needs to be changed. As such, we refer to them as standard working papers. Standard working papers are prepared well in advance before you audit. Unlike progressive ones, you prepare them as the audit progresses. All right. So management responsibility, we'll be writing this later. Management have got several responsibilities. Who prepares books of accounts? Management. Who institutes internal control systems? Management. Who makes estimate? Management. Estimates in a provision for depreciation. You estimate how much the asset might have lost within the year. You also make estimates for provisions for bad debts. It's an estimate. Provisions are estimates. It's management who makes this estimate. Who decides on whether to use straight line or reducing balance method? The management. So all those are placed under management responsibility. It's management also who prevents errors, frauds, irregularities. We capture all that under management responsibility. So then under opinion paragraph, we form our opinion. This is an example of an assurance engagement. We always write, in my opinion, or if it's an auditing firm, you write in our opinion. And that's why later I'll tell you that auditing firms can never be companies. We don't have a company who operates an auditing firm. They're not companies. They are firms or sole traders. They are partnerships or sole traders. It is prohibited by Companies Act. And not only here, even in other countries, they have their legislation prohibiting corporates from auditing. Because you know that a company is an artificial person in the eyes of law. A company cannot be able to form an opinion. And in our opinion paragraph, I told you we always indicate in my opinion or in our opinion, a company will not be able to do this. Plus, company has got limited liability. Yes, it has limited liability. And later we'll be discussing auditor's liability. We are faced with three types of liabilities: criminal, civil under the law of contract, civil under the law of tort. So a corporate, being an artificial person, has got limited liability. Although in company law, you discuss lifting the veil of incorporation to reach out to the directors. So it complicates everything when it comes to audit. So both the corporates are disqualified to audit. It's only the natural person, me and you, who are allowed to audit, of course, after meeting the qualifications in Section 21 of the Accountants Act. Then we are able to form an other legal matters. Ni hizi ndizo other legal matters. So we always capture them right after the opinion paragraph. Now we capture this, that we have received the informations, books of accounts portrayed in a fair view, presented fair in all material respect. These are other legal matters. Then you sign. Auditor signature is very strong, very important, very important. Because when we're discussing duties of an auditor, apart from duty number one, I've said this is one of the duties of an auditor. Another duty is to certify financial statements. You certify through signing. You certify through signing. So you sign, you put your address, then the date. And this date should not be any other date. It should be a date after you were able to gather all the evidence and be in a position to form an opinion. So you're writing a date after you have already formed an opinion, not any other date, not any other date. Which paragraph do you feel I should talk about it once more? Or management responsibility?
The management depreciation reduced straight line. Now the auditor will form opinion based on that levels and the management has already been using those methods to have opinion.
Yes, yes.
But he cannot introduce any other.
He cannot introduce any other. Yes. So a question she is asking, will we form an opinion based on the accounting policies identified by the management? Yes. It's management to decide whether to use straight line or reducing. But when they choose, they have to ensure consistency. You choose straight line, use straight line all through. If we are changing because we are flexible, if we are changing, change and capture it in the notes to the financial statements. Why change? Because you can't just change.
In case the auditor should write on the
yes.
The method that they are using, the auditor can
yes, there's a big problem that there's no consistency. See, consistency is one of the accounting concepts. Yes, there has to be consistency. You can't keep on changing today, changing tomorrow, and so on. Identify one and adhere to it. Actually, we always say, even when you're preparing budgets, forecasted figures, you have to use the accounting policies that you use in preparing historical data. That's one of the things the auditor will check: consistency. Very important. Yes.
When you are
yes, it's a farm. Mm-hmm.
And you see that the inspection will come in, and for addressing, it is only addressed to the people
who will be using these reports.
In case of any for example,
between
the people, this one, when you sell it,
the management.
Mm-hmm. Now, and it comes that there needs to be some investigations. We know the other than party requesting for this audit report rely on what the auditors or the opinion of the auditor entail. Because unapata in some instances, the management, tumesema ni individuals.
Yes, the individual.
That management give an opinion. And then we call for a forensic auditor audit and apeana another different opinion. Now, what do you now?
Yeah, it happens. It happens because just like the courts, you hear a lower court deciding that somebody has no cases to answer. Then you feel you're not satisfied. You take it to a higher court. The higher court may reverse, may recite the decision made by a lower court, because it all depends with the interpretation and your personal judgment. The same thing happens with the auditing. You may form an opinion. Actually, if we are given the books of accounts of KCE to audit, all of us are likely to come with different opinions. Yes, depending on the evidence we gather, depending on our personal assessment, depending on the materiality levels that we'll set, we are likely to come up with different assessments. So the auditor's opinion is final when it comes to auditing, because it is a professional who has been engaged and entrusted by the shareholders to act as watchdog on behalf of their resources. Where do forensic audit come in? We don't just perform forensic audit. Forensic audit is triggered by suspicion of fraud. Ordinarily, we perform statutory audit. This is statutory audit. And we perform it because number one may be, it's a requirement of law for all companies to subject their books of accounts to audit. Other entities, we found the advantages that may accrue. But anytime you suspect a fraud and you want to unearth three things, you want to identify the perpetrators, you want to quantify the loss suffered, you want to ascertain for how long this fraud has been taking place, then you subject your books of accounts to forensic audit. So it's not a regular thing, only triggered by suspicion of fraud. We have different types of fraud. Could be employee fraud, could be employee outside the fraud, could be management outside the fraud, could be management auditor fraud. It happens that auditor's independence is compromised and is involved in these fraudulent activities. We've seen it happening. Other times, even what I mentioned last time about opinion shopping. Opinion shopping, we say this is when the client looks for an auditor to give them a good report. It's a fraudulent, it's unethical, and it's fraudulent, and it is fraudulent. So anytime we suspect fraud, we engage forensic auditors, forensic accountants to unearth, to achieve those three objectives. Who perpetuated, how much was lost, and for how long it was perpetuated. And then statutory audit every other year. It has to be performed. We don't see any reason why people out there will not place reliance on the auditor's report. He's a professional accountant, qualified, competent accountant, who has examined the client's books of accounts. So not unless along the way we doubt about the qualifications of the auditor, the competencies of the auditor, the independence of the auditor, then those are some of the grounds why an auditor could be removed. That if you assess and find that the auditor is not independent, that's sufficient ground to remove the auditor. Title addressee. Oh, these things here. Oh, the introduction, we are introducing the client. We are saying we audited the books of accounts of KCE Limited, which includes income statement, statement of financial position, cash flow statement, covering a period from 1st January 2022 to that 1st December 2022. Right? Question there. I don't know whether it's
sometimes you find it quite unusual that auditors sign against statements of the last years or let's say for example, depending on which sector, what is being audited, the costs, or I will use that case of insurance. I know which answer you at the end of the first course. So then we move to that issue in the what citing those statements. What's the upon issuance of the opinions of the financial statements, why is it not okay for them to sign these statements the few days after the issuance of the but instead they wait until 35 of time sign these statements?
And they have
It's a common and also sector is
you know what the reasons why we audit: number one, we want to meet the statutory deadlines, and number two, the client's deadlines. We have two deadlines to meet: the client's deadlines and the statutory deadlines. So by signing them the very last day, that again confirms that we've met the statutory deadline. Yes, although there's no harm if they signed earlier than that.
Because of the time steps, you have to with your company director also to be able to sign this. The partners to sign the same. So
Yeah.
usually a lot of pressure that comes when these statements are signed on the email.
Yeah.
So I was just curious that one whether this is something that
It's a practice that and that's the time they give the opinion about the financial statements. They're not able to give it early enough. They do not give it earlier than then signing comes later. They give the opinion the due date, and that's the time they sign. They do the same at the same time, giving the opinion and signing.
you have the opinion beforehand.
Or beforehand, eh?
Beforehand. They're able to review the financial statements and confirm that.
Yes, because basically that's what should happen. You have it in advance, you check through, then you agree before they sign.
So like
a week before.
days before that.
Okay.
And then when you ask for the same copies, goes up to.
It's not about meeting the statutory deadlines. Let me tell you, if there are people who work within very strict deadlines are the auditors. Because most of the clients have got their years ending on that 1st December. Most of the clients check their books of accounts. They end their year on that 1st December. So between 1st January and 30th June, when these other corporate returns have to be filed, they overstretch. So it's working within the deadlines because you've just indicated that they avail copies for review like a week to the deadline. Yes, it's about constraints. They have so much. Plus, take note of this. They cannot employ so many staff because remember there will be an off-peak season from July to December. So if they had employed a large number of staff just to handle these tasks, then they are likely again to strain again to retain them, to pay them between July and December. So they do not increase the staff levels to handle this peak season task. So it's a matter of meeting deadlines. Signing earlier would not have issues. It will still be very okay. But signing after, it's problematic. So I think they just tread within that, yes, deadline to put their signing. Thanks for that observation. Have we answered all the questions? The last one, then we proceed.
There are any consequences for having the financial year being in between the year, not from January to December.
There is no trouble. It's very okay. It's very okay. So you can have your ending on that 1st March, your year ending on that is June. Since government's year ends, that is June. It's very much in order. So what you do after your year end, then your filing comes 6 months after. Your year end. It's only that people wish to operate in uniformity. Yes, you want to do what others are doing. Yes, we are always asked about year end when you are filing for PIN for a corporate, even when you're registering the name of the corporate. You find everybody is like pushing it to that 1st December. They want it to be there, but there's no harm. It will be still very okay to end on 29th February, end of November, end of September. It's still in order. So you see that in financial accounting, Financial account unakuta kwamba mwaka unaisha tarehe fulani. All right, you can proceed. Then other questions, you can handle them. So if you're not satisfied with the work of an auditor, there's a way you will replace them. We'll be discussing this. We'll be discussing legal and professional framework of an auditor, where we'll discuss number one, appointment, remuneration, removal, resignation, rights, duties. We'll do up to I. Yes, A, B, C, D, up to I, aspects relating to auditors. Thanks for those questions. We have two types of opinions. Stroke reports. Yes, by now we know that we have number one, unmodified. Unmodified, stroke unqualified. Unqualified report. Then number two, we have modified. Modified reports. Yes, so to discuss number one, unmodified. Yes, this is a clean report. It's a clean report. It's a clean report, i.e., a good report. A good report. It is issued. It is issued when the books of accounts, when the books of accounts portray a true and fair view. Portray a true and fair view. Say the vitabu ziko sawa sawa. That's when you give a modified report. Yes, usiulize kwa nini sijaziita unqualified. I'll explain. Because we'll have so many other types of opinions from this. So these are clean report, i.e. a good report issued when the books of accounts portrays a true and fair view. A true and fair view. Or generally we say issued when the auditor cannot introduce any reservations. Cannot introduce any reservations to the contents of the 7th schedule. These are the contents of the 7th schedule, that we cannot introduce any reservations. We are okay that the books of accounts have been presented fairly in all material respects. We have received all the informations and explanations. We have received sufficient returns from the branches we never visited. The books of accounts portray true and fair view. Then we issue an unmodified report. All is okay. All is okay. We give an unmodified report. Ati ukiangalia vitabu ziko sawa, presented fair. Branches have given you sufficient returns. Yes, the books of accounts have been prepared as per the provisions of the Companies Act in the manner so required. And they are fine. They portray true and fair view. You give an unmodified report. You give an unmodified report or an unmodified opinion. All right. Then number two, ishikiria engine unqualified. Because see, at unqualified is a clean report. So you know unqualified is a clean report, eh? Yes, it is a clean report, but I'll try to distinguish it between unmodified and unqualified. So number two, we have modified. Modified, a bit called. Modified reports. Modified reports, these are bad reports. i.e., when the books do not portray a true and fair view. Two types of modification. Number one, modification affecting the auditor's opinion. Then number two, modification not affecting the auditor's opinion. So number one, modification affecting the auditor's opinion will be discussed using qualification matrix. Qualification matrix. Hii topic watu wenye wanaochigi ball saidi unasemaga unapea kichwa ni kumaanisha ni sure bet. Sasa hii ni sure bet. Hii inakuwa kwa mtihani all the time. And that's why ukiangalia kwa syllabus utashangaa kwani Clement ameruka hizi topic zote akaenda kwa hii. Kuna vile najipanga. Yes, kwanza nikuletea ile iko kwa mtihani ndio ujipangage sisi tukimaliza syllabus. Yes, ni hivyo nataka. So ukiangalia kwa syllabus ukute nimefunza topic gani usishangae. Ni kwa sababu these are sure bet. Sure bet. I want you to have enough time to revise and internalize on this. Nature of circumstances. So that's we refer to that as qualification matrix. We refer to that as a qualification matrix. I can always read for you if something is not very clear. Pervasive, material and pervasive. Pervasive. material and pervasive. Any other statement which is not very clear? So nature of circumstances, material and pervasive, material and not pervasive, limitations on scope, disagreement, disclaimer, adverse, qualified stroke except for, qualified stroke except for. So online family, maybe you can scan the whiteboard. I want to rub here. For online family, sana who on a screenshot, yes, please. Qualified stroke except for. Nimefinyilia juu hii ubao yangu imejaa haraka. Nimeandika qualified stroke except for. That way. In both boxes, qualified stroke except for, qualified stroke except for, qualified stroke except for, qualified stroke except for. Ndio tuhakikishe tumeandika mambo yako shwari, mambo yako shwari. Yes, pole kwa homa, concussion. Yes, concussion. Na maji moto kwa wingi. Maji moto kwa wingi. All right, we are done. I need to explain now, because we always talk of qualified and unqualified, but you see we have several other types of opinions. Na wanapenda sana kuuliza kwamba tupeane 4 types of opinions. Anakupea 8 marks like that. So hizo mtu anasemanga unmodified, adverse, disclaimer, and except for. 8 marks like that. 8 marks like that. Yes. So let me explain the components outside the matrix, because these are 2 by 2 matrix. This is just tabulation. So limitations on scope. What do we mean by limitations on scope? Hii ni saa ile, wacha kwanza nielezee before you even write. This is when you lack, or you are not able to gather all the evidence that you required. There's an evidence you needed, but for some reason, you are not able to gather this evidence. There's an evidence, there are some informations and explanations you expected from the client, but for some reason, you are not able to get this information. That's limitations on scope. Yes, so naweza nikaita inability to gather all the evidence considered necessary. This arises as a result of, Roman number 1, it could be hostility. Hostility on the part of management. Management wako tu hostile, hawakupea information yenye unataka. Ama unaweza weka stroke, lack of cooperation. Lack of cooperation. Management wanakupea hard time. Roman number 2, maybe books of accounts. Books of accounts destroyed by fire, e.g. That's just an example. Unakuta kumbe kulichomeka. Hizi kuna moto mingi, sijui Toy Center, sijui Gikomba, sijui wapi, sasa huyo kimuitisha vitabu zake ziko wapi. You get the reasoning, behind the limitations on scope. They've been destroyed. They're not available. Evidences which you considered necessary cannot be accessed. Yes. Or maybe books of accounts seized. Is it seized or seized? Pronunciation. What's this? Seized. All right. Seized by a government authority. Yes, umeenda kuaudit, wanakuambia wa KRA walikuwa hapa wakabeba vitabu. They suspect there is an element of tax evasion. So wewe kama auditor sasa hauna vitabu, ziko KRA. That's what I mean. Books of accounts seized by a government authority. Seized by a government authority. Yes. Ama saa zingine unajua saizi kuna client anaweza kuambia umaudit saizi na deadline ni in how many weeks time? 1.5. So kuna information hutaweza kupata juu there is no time. There is no time. Hiyo pia ni limitations on scope. Tuite engaged at a time where it is impossible to perform some standard audit procedures. For instance, ungetaka kuandikia debtors barua wa confirm. Sasa hizi ukiandikia mtu barua ata confirm lini? Atakawia sana. Yes. Hata akireply within a week, I mean, itakuta sasa hata ni report na form. Yes. Ama saa zingine kama mimi, siku na heshima ananiulizaga swali najibu after 5 days. Yes. Sasa ile nimepata time sana ndio huwa na scroll. Yes. It's a problem. I don't know how I'll ever solve this problem. But it's tight schedule. Yes. I realized it's troublesome. There's a day my dad texted me and then ikafika sasa weekend nataka kwenda home. Ndio nilikumbuka kuna message siku reply. Yes. And it's after a month. So I replied at night, then I went home the next day. Nikajua hii ni shida kubwa. Yes. It's always when you identify a problem, it's very easy to solve it. I think I look for a remedy to that. Limitations on scope. Sasa tumeshika hii story. Ni saa ile evidence imekosa. Ni tofauti na hii. Hii uko na evidence yote, hakuna kitu inakosa, but you disagree. Mnatofautiana. Nakuta umeweka provisions for bad debts 1,000. Lakini naona hapana, kulingana na hii data it should be something like 7,000. Are you seeing that disagreement? That all evidence is there, but we disagree. Yes. Or maybe, what else can we disagree about? We could be disagreeing on accounting policy. Yes. You changed to straight line from reducing, but I disagree because of some reasons. So we have all the evidence. Yes. So number two, with regard to disagreement, we say unlike in limitations on scope, under disagreement, we have all the evidence. We have all the evidence, only that we take a different position from that taken by the client. Yes, areas of disagreement. Areas of disagreement. One, on amounts, we could disagree on amounts, on figures, on accounting treatment. Si hata hapo kwa class mnajipataga hapana, hii inaongezwa hapa. Hapana, hii sababu ni tax inclusive, inafaa you disagree. Yes, you disagree on accounting treatment. We could disagree on presentation and disclosure. We could disagree on presentation and disclosure. We could disagree on interpretation of an accounting concept. All this, we have all the evidence, lakini tunatofautiana. We have all the evidence, lakini tunatofautiana. That's disagreement. So limitations on scope, some very vital evidence is missing. We can't access that evidence. Disagreement, we have all the evidence that we required, lakini tunatofautiana. That's a disagreement. All right. What about materiality? Sasa nitafuta hapa. Lakini sifai kufuta hapa ndio tuweze kuconnect, nitafuta hadi hapa. Yes. Materiality is subjective. Materiality is subjective, highly subjective. Yes, because what you may consider material may be very material to someone else. Yes, kama vile saa zingine tukipata loss kwa kitu umeinsure. For instance, gari imegwaruzwa, unasikia kwamba you are incurring around 70,000 shillings. To us that may be very huge figure. Lakini kwa insurance wamezoea kuinsure mabuildings za billions, the millions. So to them is very immaterial. It's very immaterial. But to you it's material. The same thing to one entity, it could be very material. To another entity, could be very immaterial. So that's materiality. So what the auditor does, so number 3, material. The auditor sets a materiality threshold. Materiality threshold. Akishaelewa client vizuri, anasema anything, I'm setting this materiality threshold at 17,500. Anything below this is immaterial. Anything above this is material. This is the materiality threshold. It varies. It varies. It varies. Yes. I was telling you, kuna saa zingine hata unakutaka mnasumbuana na mtu sababu hajui pesa yake fulani ilienda wapi kwa M-Pesa. Anaenda kwa Safaricom asubuhi. He won't explain where 40 shillings went. Because aliacha ikuwa 100, sasa ni 60. Ama ni airtime. Because 40 is so material to them. But the others, utakuta kwamba pesa mingi sana hata hawajuagi. Si kuna wazazi wenye hata watoto wao wanajisambazaga pesa mingi sana na hata hawajui. Yes, yes. Hata simu yangu ukisambaza 5,000 siwezi nikajua. Yes, because to me that's so insignificant. That's so insignificant. So we set material threshold. So we are saying an item is material if it surpasses auditor's materiality threshold. An item is material if it surpasses the auditor's materiality threshold. Yes, so a balance may be a balance or a transaction is material if it surpasses. It surpasses. Surpass the auditor's materiality threshold. So hiyo ina vary. Hiyo hatuwezi sasa tukaset materiality ni hii. Ina vary kutoka. What about pervasive? Roman number 4, pervasive. Let me give you an example of pervasiveness. Let's say umeenda kwa company A, unataka kuinvest pale. Walifanya profit here that 8 million. Sasa umeona utainvest pale sababu this is a profit making venture. But after assessment umerealize kwamba profit was overstated. This was overstated by 1,200 shillings. You wanted to invest here because they made a profit of that 8 million, but upon assessment umekuta this profit have been overstated by 1,200. Would this change your mind to invest in this company? Because it is not pervasive. It's not pervasive. A balance or transaction is pervasive if it is likely to affect the decision making of the intended user. It's also pervasive if it takes up a significant proportion of the balance which it comprises. How much percentage is this out of this? It's 0.0000 something. That's pervasive. That's not pervasive because it's so insignificant. Yes. So we can say an item is pervasive if it takes up a significant proportion of the balance which it comprises. It's also pervasive if if it is likely to affect, most likely to affect the decision-making process of the intended user. It's in effect. Na ukishajua hawa wasee waliripoti faida na ilhali walifanya hasara, that's pervasive. That's pervasive. You are likely to change your decision. So I read for you, because saa zingine naandika kama daktari. If it's pervasive, if it takes up a significant proportion of the balance which it comprises. Takes up a significant proportion of the balance which it comprises. It's also pervasive if it is likely to affect the decision-making process of the intended user. That's when it is pervasive. Sasa tunaweza discuss hii table. Kwamba, when you miss some evidence, and this evidence is pervasive and have surpassed the auditor's materiality threshold, you issue a disclaimer of opinion. If for real some evidence is missing, but you don't consider them pervasive, you issue an except for. Kama hii, tukisema, the books of accounts of ABC Limited portrays a true and fair view, except for non-provision of bad debts, except for non-provision of bad debts to the tune of 1,200. In all other aspects, it portrays a true and fair view, except for. Niaka to except for. But of course, is your limitations in disagreement. Maybe you're disagreeing because they never put this. Yes. So you need to consider seriously before you make an opinion. Is it an element of missing evidence or a disagreement? Because if it's a major disagreement, you issue an adverse. Major disagreement. Let me give you a very good example of a major disagreement. Kwamba, hii kampuni ni kuanguka inaanguka. But the client prepares the books of accounts as if the entries are going concern. They exaggerate on assets, on cash and such, which is not the true position. That's a major disagreement. This entity is going under, yet they prepared as if it's a going concern entity. You issue an adverse outright because those financial statements are misleading. Totally misleading, because somebody may give them loan. Yes, only not to be able even to make the first installment with regard to payment. It's an adverse opinion. But if there's a insignificant disagreement, you issue an except for. Tell the users that the books of accounts are okay, except for such item. Praise God. Ni vile mmetulia. Yes, ni vile mmetulia. But I know you are internalizing. You're digesting this. Kwamba, I take it again, the last shot. Some evidences are missing, and what is missing have surpassed your materiality threshold, and it's very pervasive. You disclaim your opinion. Evidence missing, what is missing could be material, because materiality is subjective. But it's very clear it's pervasive. It's not pervasive, rather, for this case, that it's not likely to affect the decision making. Then you issue an except for. You have all the evidence at your disposal. No evidence is missing, but you disagree with the client. Why have you treated this as an income? Why have you treated this? Why have you not recorded this as an accruing aspect? You disagree on such things. If they're very material and pervasive, you issue an adverse. Could be material but not pervasive. You issue a qualified opinion stroke except for opinion. Or a disclaimer. A statement that portrays a disclaimer. Yes, client's entity is not a going concern. Client's entity is not a going concern. Kumaanisha, maybe it's facing financial distress. So you understand this, eh? Financial distress. So you've seen KQ facing financial distress until government chips in. Eh? Then you need some, the client is still convincing you. The client is convincing you that they are doing everything possible to make sure that it's a going concern. but there's no documentation, there's no any arrangement, or even if it's there, they're hostile for some reason. Unajua mtu akiwa na shida vile anakuwa na hasira mingi. Yes, they are hostile. I'm looking for that term. Yes, they are hostile for some reasons. They're not cooperating. So, as much as they're telling you that they're doing everything possible to put the entity back to its financial stability, you don't have any evidence. They're not availing it. So you're missing some crucial evidence, because all of us, we face financial constraints sometimes, but we do everything possible. Unachukua hii ya Ruto inaitwa Hasra Fund, inakusukuma siku kadhaa. Yes. So you see, you're facing financial distress, but you have way out. The same for corporates. I'll discuss with you 6 ways, but let me not fast track now. We'll discuss them when we get there. But they're not availing any tangible evidence to show. So some evidence is missing. So you only stand with your conclusion that it's not a going concern. So that way, some evidence is missing. Adverse. Adverse niyo nimekueleza kwamba, am I using going concern so much? Did I look for another? An adverse opinion ni client's entity is not a going concern, but they prepare as if it is a going concern. So wametengeneza vitabu, ordinarily they've made huge losses, but because they want to convince some investors out there or shareholders, not shareholders can replace the directors. They want to escape the wrath of shareholders. Watengeneza vitabu as if all is okay. Those financial statements are misleading. You disagree with them on the way they prepare the books of accounts. I don't want to use jargons, because when the entry is not a going concern, you're supposed to prepare books of accounts on a breakup basis. Let me discuss those terms when we get to going concern. Yes, so if the client prepares books of accounts as a going concern, instead of preparing them on breakup basis, and as an auditor, you are privy to that information, that's an adverse. It's a total disagreement of an accounting concept. You're guided by ISA number 570. ISA 570 guides us on that. A major disagreement. Disagreement kubwa. Disagreement kubwa. Disagreement kubwa. Yes. Do I have another example of disagreement? Unaweza kuta wamenunua kitu kubwa. Issues of capitalization. Yes, it's a revenue expenditure, but they capitalize it, and it's a major expense. Unajua major expense, it reduce profits. Lakini sasa badala ya kuweka kwa expenses wakaicapitalize, IAS number 16 wakaiweka kama ni non-current asset. An expense incurred with regard to acquisition of plant and machinery item. We know that all the expenses incurred before you put an asset into use should be capitalized and subjected to depreciation. But here comes an area where they incur an expense after installing, but still capitalize it to ensure that it does not have an effect in the profits. Are you getting that reasoning? If that figure is significant, that's why we are talking of materiality and pervasive, you issue an adverse. Because we refer to those as transactions which may have a reversing effect. It may reverse profits to losses or losses to profits. Wewe sasa shika kwa urahisi, kutosikizana, kutoelewana. Na kama hii kutoelewana ni kubwa sana, unapeana adverse. Adverse inaitwaje kwa Kiswahili? Yes. Yes? Mbaya kabisa. Yes, mbaya kabisa. I'm liking those questions. Any other thing that we need? So shika vizuri tu hii tabulation. Si unaona ukishika hivi sasa hii unaweza explain in a very big paragraph. In a very big paragraph. So leo hakikisha. Which column?
Qualified except.
Oh, qualified except for. Hii sasa ni kama kaisho kama hapa. Wacha nikupe hii example vizuri. Nilisema hii profit ilikuwa overstated, si kusema ni kwa sababu gani? Sababu hawako write off hii bad debt. Na tushakubaliana kwamba sababu ya hii overstatement by 1,200, you not change your mind to invest in this company because it's a profit making venture. That's 8 million. That's the profits reported. So we issue except for when the information missing is so small, when the contentious information is so insignificant. You see, comparing these profits with overstatement, hata kuna tofauti kweli. Yes. Si kuna pesa unaweza angusha kwa matatu hata usishindanie. Kuna ingine utaangusha ufike hadi mwisho watu wote washuke. Umulike vizuri ni wapi ilienda. Yes, such. So kama ni hiyo tu huwezi ukatafutilia sana, hiyo ni except for. Yes.
That without that audit mind, that if it is qualified except for, it could have been unqualified except for one bad thing. But this one is bad, which is qualified, then except for another bad thing.
It's the same. You can choose to do a qualified or they mean the same. I don't know.
Qualified except.
No, qualified stroke except. Qualified is a bad report. You know that, eh?
Except for that bad thing.
Except, exactly. Yes, that's it. Except for, yes. Except for that thing which was never treated right.
No, so sorry. No, everything.
It means,
okay,
yes.
But only that 1,200 out of the 38 million.
Yes.
The bad thing.
Yes.
But now we are treating the 38 is qualified bad also. Then we say bad thing.
If I'm getting, take it again. How you wanted to rephrase? Qualified is a bad report. Modified except for. The report is bad. Oh, now I get you. I get you. No. Listen to how it's a very good argument. Eh? Listen to how I'm phrasing my opinion now. That the books of accounts portrays a true and fair view, except for non-provision of bad debts to the tune of 1,200. The books of accounts portray a true and fair view, except for this. It's already, it's modified. You see, we have two classifications, eh? Unmodified, which is good, eh? Then we have modified. Where are the, we have the modified. So this report, that's why I said I will not talk of qualified here. Because qualified is inside modified. Yes. And these books of accounts could be fine if it were not for this. These financial statements could be fine if it were not for this. So they're not fine.
Well, we just say that.
Except for as an indication that that element of not being fine is not so significant. It's not something that would make you, yes, ni ile kwamba ni panya tu iko kwa nyumba, usichome nyumba. Ni kapanya tu kako na shida. Na kakiwa ana shida kuna shida, lakini sio shida inaweza fanya tuchome nyumba. That's it. If you listen to my phrasing, that the books of accounts portrays a true and fair view. So that means they are good. Except for. I'm trying to say that. It negates because qualified is bad. Let's listen from that. Yes. Yes.
For that bad debt, then the except portion of the tax 1,200. I think
Uh,
But I would also say that maybe it was for it to come out to the auditor. That the book, because you want to have auditor saying there was some limitations.
when some evidences are missing,
Right?
yes,
Then it goes now related to the material and not pervasive.
yes,
The affirmations, you know.
yes,
It means on my side, I would not say that this report is unqualified because it already contains some problems according to my material and not person side.
yes,
Why? It has idea meaning to be, can I say to be on
on the safe side.
the on the limitation on scope is already on a shida. How do I again tell my intern, my bio to say that it is unqualified?
Yes.
I have already identified some problems.
So you modify it.
So it is you now where we come management. I show you the except for my side.
Yes.
For me, if I'm on the auditor side, I would be qualified
Except
for cover my management, cover my works.
Yes.
And saying it is unqualified, and yet me we shine it.
Yeah. The beauty of this is I'm actually getting right your reasoning. I'm getting right your reasoning. What I'm trying now to bring on the ground is expounding it further so that we get it right. You see, it's like sometimes there are some things which remains the way they are. Yes, like we learned that these things should be debited, and it should be debited. Yes, because IAS number 1 says it should be debited. So then we want to explain why it is being debited. You know, sometimes you lack a reason to say, and you say it's because IAS number 1 has said these things should be debited. So it's something of that nature. Let's try to discuss it slowly by slowly. That unmodified or is okay. Yes, kwamba we cannot introduce any reservation. Then modified reports indicate that there is a problem. There is a problem. It's not okay. There's an issue. There's an issue which you have said either some evidence missing or we are disagreeing with the client. So onslaught or ab initio, there is a problem. Now, when evidence missing, we describe, or when there's a disagreement, we issue an adverse. If they're not pervasive, then we do an except for. Now, that question, that example that I have highlighted there, number 1, or is not okay. So you're in agreement. This one. Or is not okay. Ni vile tu, ile inafanya kwamba isikue okay, ni kitu kidogo. Si ni kweli? So what are you thinking about that? Kuna mahali imezekana statements are contradicting themselves. That one outright is modified.
The wrong thing is
the wrong thing, it's not pervasive. So are we agreeing because of this status? This status means now we modify our report.
literally should not.
Oh, you're saying we should not?
Assuming the banker.
You're assuming?
Assuming that the banker disagree. And I want to give a loan depending on the audit.
You'll still give them.
Yes.
Because the contentious information is not pervasive.
No, I'm a heavy user of the auditor. Now, if I approve this loan and later realize that the auditor gave a qualified except for. So long as that report is qualified. Now, I'm another part. Because I qualified report to make my judgment work.
Anyway, I see what you're saying, that I should say this element should not even in the first place come to modification aspect. Because like in my statement, I'm saying the books of accounts portrays to and fair view, then it's not a modified report now. It is a clean report, except for.
Theoretically, it should be unqualified except
for
small thing that is immaterial, not pervasive. That should not be there.
And that's what I'm saying. Only that now I've placed it in the qualification matrix. So that's what my statement is reading. Only that now it's placed elsewhere, comparing to my statement.
Then when we just like having a yes and a no, or 2 no's and 2 yes.
At the same time.
But then I understand the way it's coming. Maybe just to reiterate, whenever we introduce exceptions to the report, then it is modification.
That's it by its own, its modification.
Okay. So like we say, it represents the financial statements represent the full except for. So really, from you already modifying that report.
True.
And back to the qualification matrix, qualified report is a modified.
Yes. Correct.
Well, I think I wanted to put it another way because I don't really understand.
Yes. The same thing I wanted to, you realize at some point I was like, I'm not saying anything, I'm just revolving around. It's disappearing somewhere. Ushaisikia kujikuna alafu it's moving. You can't catch it exactly where it is. Yes. Let's hear these input again. Yes.
Say to material and not pervasive.
Yes.
It's not, it is pervasive because
It's,
imepita mipaka.
Pervasive haijapita sana, materiality ndio sana sana kupita. Pervasive ni ina affect decision making.
So not pervasive.
Not pervasive.
Yani cannot, haiwezi fanya nisinvest maybe.
Yes, yes. It's not something significant.
So my point of view is, ukiweka pale faida, unaifanya tu na kambaya na ni a small amount that is affected. But if we put the qualified, hapa pa material and not pervasive, usiweke huko kwa hapa pa material and pervasive because that is a very significant amount that can make me change my decision. So kwa hiyo you qualified for him and their material and pervasive.
Hapa ndio kuna qualified na hapa pia kuna
That's again, I want to point out
the matrix, yeah.
When you check on the nature of circumstances,
yes.
What can make this auditor, leading the auditor, bring to this qualified exception? Tunakuja hii side ya limitation of scope.
Yes.
Na tunakuja hii side ya research.
Yes.
So for him to give the qualified exception and qualified exception, it is because there were some limitation of scope,
yeah,
and some limitations, some disagreements.
Yes.
So for that when you place yourself on those two positions, you would also give the same opinions. So I think we should first come on the nature of circumstances. What leads the auditor to come to the material and not pervasive, and the material and not material and not pervasive? It is because of the limitation of scope and disagreement. So ukijiweka on those two circumstances, tayari ushapatana na hostility or tayari ushapatana na disadvantage side. So how again do you find your living on unqualified? Ushakuaruzana na wale watu unaona zile vitu they are not in line with what you know about the standards of audit.
Yeah.
I think that is what the people that brought up this material, the matrix, because of those two
aspects, yeah.
Tayari usha disagree na tayari pata limitation of scope. Yani ni mafuta tu unajaribu kupaka when you give on qualified method. Yani usha make the difference. It's qualified except for unajaribu kuwasaidia.
Yeah. Do you know what happens in practice? When you find such issues of disagreement, you don't just rush to qualify or issue an adverse. You report to the management. CNFA, you did correction of errors. Correction of errors. When you correct the errors, see now the accounts balance without the suspense account, for instance. So you come across issues. You're supposed to prepare a management letter, highlighting all these weaknesses. Then discuss it with the management. Such issues, I tend to believe they'll be solved before you do the final report. So that's why in most cases you'll not find these lots of modifications in the final report. Because you come across issues, you don't rush to report, to conclude a report. We always do an interim management letter, yes, or a draft management letter. You discuss with the management. If the issues are resolved, then you give a clean report. You give a clean report.
Just on what the latter where you issue a draft.
Yes,
so
yes.
Basically, there's that concept of like what you don't know does not hurt you.
Yes.
So basically, it means for the users of this maybe reports in data here. So out of kujua, like there was some misstatement in and because if you issue a draft, the management is going to rectify that issue. So basically, to the end user, ataanza kujua hizi vitu zilikuwa zimehappen.
It's true.
It won't affect his or her decision. So for me, I think I understand.
I think what we finalize is wacha tupelekane na ile rafiki yetu pale nyuma, because hii haita change. Maybe I need to change my example. Yes, because inaweza kuwa I need to come up.
Don't like giving an outright bad report.
Yes.
Yeah. So they'll try to modify it. But they just don't bring it out strongly.
Yes. Yeah. So tukubaliane, we shika hii. Sawa usibishane na customer, si ndio? Yes. Tushike hii, si ni kweli? Sababu ni hivi iko. That's why umeona nimesema it's like I can look for a more good example, yes, which will be very clear that these are not adverse, the disclaimer, these are unacceptable, because this tabulation remains. This tabulation remains. That was that. Yes, yes. Sometimes when I Julie, I've not lectured this here for the first time, but nobody have ever seen that one. Yes, so that's why we say it's a running process. It's a running process. Juata means nitakaa chini sasa nikae chini vizuri nijiulize. Hapa kulikuwa kunaenda hivi. So why? Yes. Yes, that's a good insight. And still, believe me, sasa hii table utakuwa unaiona hata kama umefunga macho. Because of your discussion, utakuwa tu unaiona mpaka unakumbuka so and so said so and yes, ikafika mahali. It's good. It's good. It's excellent. It's excellent. Is that
so? Material and non-pervasive.
Oh, material and non-pervasive.
Yes.
It should be immaterial.
Yes, immaterial. So if you material and when you the materiality, you check the pervasiveness of that particular item. But if you use material, then you use also not pervasive.
It's
negative.
Ni kama ile nakwambia kuna nuru gizani. Nuru ya giza cannot be there at the same time. All right, that tells Clement to go and interrogate further. Yes.
We accept as
yes.
They are the ones who
the ISA 700, the provisions of ISA 700.
Kizungu haituanga straight kwa mahesabu. Ungefikiria kizungu wa isio gani. But if you think like a mathematician or an accountant, you can go and check even the questions primary. If you follow in
English,
really get it. But if you follow it
mathematically. Good. Tumefunga hiyo chapter. Si ni kweli? Na tumefunga chapter ya kusema sasa iende iangaliwe kwa macho ya kiroho. Yes? iende iangaliwe kwa macho ya kiroho. Sasa hii ya kimwili sasa inaleta stress to engage ya kiroho, to interpret. Thanks for all those insights. Thanks for those insights. See, I do the I don't even know the time. We have a lot of time. And kumaliza is the last thing I want to discuss. We've discussed modifications affecting the auditor's opinion. I want to do modifications not affecting the auditor's opinion. Yes, online family may be worrying. There's no violence in the room. Yes, it's just contribution and insights to this. Number 2, modifications not affecting. Modifications not affecting auditor's opinion. Modifications not affecting the auditor's opinion. Hii ndio inafanyaga tupeane opinion, inaitwa unqualified. This one makes us to give, check this, makes us to give this unqualified opinion, makes us to give this unqualified opinion. Because, yes, it's a modification not affecting the auditor's opinion. Yes, so we give a clean report. We give a clean report, but check this, we are modifying. So we can never talk of modifying and unmodified in the same statement. It's either modified or unmodified, right? So since it's modified already, we rule out unmodified. But since we have no intentions at all to affect the auditor's opinion, we still want to give a clean report. So we call it unqualified. Unqualified is right. Because if we call it unmodified, so I'm putting contradicting statements in one statement. So to modify outright, it ceases to be unmodified. But since we have no intentions to modify it, we don't have intentions to give a bad report, we call it unqualified report. Then we introduce an emphasis of matter. Remember the elements of assurance of a report? Number 6 was opinion. So opinion, the auditor gives a good report. Then number 7, we talked of other legal matters. Other legal matters. So this emphasis of matter comes in here. And we always write without qualifying the auditor's opinion, then you proceed. Without qualifying the auditor's report, I would like to emphasize on going concern complications faced by the client. I would like to emphasize on material uncertainty. Material uncertainty. I would like to emphasize on material inconsistency. These are the 3 things which necessitate to introduce an emphasis of matter. Kwamba vitabu za client zinaanza kuwa ziko sawasawa saa hizi tukifunga mwaka, lakini wako na kesi kotini, kesi serious, material uncertainty, kesi serious kwamba wakishindwa hiyo case, hiyo biashara imeisha. So tunawaambia nyinyi wenye wanataka kutumia hii vitabu, tukifunga mwaka, all is okay. The books of accounts portrays true and fair view. But there's an issue which is so uncertain and it's so material. An ongoing litigation, an ongoing case where the client has been sued for what? Maybe the client has sued for handling counterfeit goods, or the client has been sued for infringement of certain patent rights, for instance. Or maybe they have constructed their building in a road reserve or something. And if they lost the case, then the going concern will be threatened. They may be required to close down. Kitu kama hiyo. As far as the end of the day is concerned, perfect. But would like to emphasize on something. That the going concern is threatened. That there's a material uncertainty you need to know. As a potential investor, as a potential financial, or something. Yes. Or there's a material inconsistency. Inconsistency ni client kuna kitu ametreat kwa vitabu vile haifai. Lakini wewe kama auditor ukiangalia unaona yenyewe this is the only way to do it. You concur with the inconsistency. When wamefanya IAS number 7 cash flow statement kwa FR, saa zingine unaambiwa hii kampuni imechukua risk item kutumia kwa biashara. Na unakutaka hiyo risk property. We know risk is a liability. But wewe unakuta we debit the asset risk, we credit risk. We are going against IAS number 16. Assets are items of value owned by the client. Leased property is not ours, but we record it there because maybe it's a permanent lease. We intend to use this asset for its entire estimated useful life. So debit, lakini accounting concepts zimekubali, ndio huwa tunaita substance of a form. That's when we disregard the substance and record the form. So if you meet something of that nature, which has got some inconsistency, but after your analysis, you concur with how the client has done it, you have to introduce an emphasis from a paragraph to capture it therein. So the books of accounts portrays to in favor, but I would wish to, without qualifying this opinion, I would like to bring to the attention of the intended users about one of these issues. Mnanyamaza, naona kama kuna swali mnataka kuleta. Yes. Anyway, questions are welcomed, and that's it. That's it. Kama kuna kitu sija discuss ya report ni qualities of an auditor's report. Hebu andika hapo qualities of an auditor. I don't know whether I have them here. But they're very simple. Should be complete, should be concise, should be to the point. Is a point. Qualities of an auditor's report. Who was inaulizwa? Hata kumbe ndizo ziko hapa. Should be clear. Should be clear. Should be concise. Concise and brief. Concise and brief. Should be direct. Isipige makona ma suspicion. Should be direct. Yes, you can do an IE hapo kwa direct. Should not create any suspicion. Hapo kwa should be direct, IE should not create any suspicion. Should not create any suspicion. Should not create any suspicion. Next. Should be specific. Should be specific. Should be specific in terms of facts and amounts. Should be specific in terms of facts and amounts. Should be specific in terms of facts and amounts. In terms of facts and tumesema should be clear. How many points are those? 5?
5 points.
5 points, 4. Kukaa karibu na mwalimu kuna point unapataga za kama hazijafikia wengine. Kukaa hapa hivi unajua sasa hapa you get straight before yes. All right, let me take the first one is complete. Sini kweli. Should be complete, meaning that so we've seen the elements of auditor's report. To should have all this. To should have all this, and should follow each other. Should follow those points. Those elements should follow each other in that order. Hata kwa mtihani watu najaribu usichanganye sana. Ikae organized. Usiweke points sasa ati number 5 ndio title. Ni sawa uwezi anguka. Although unajua unaweza kutana na examiner ako na mambo zake. Anashindwa huyu saa anaweka title ikiwa number 5. I mean, si unajua examiner makiwa na watu. Na hawa watu wanaweza kuwa na pressure zao za life. So unaona vile siku hizi watu wako na pressure. Yes, akute umechanganya. So always try to follow that order. Try. It's not a must that you follow that in that order. That's how we cover auditor's report. We stop at that. Initially nilisema kuna baridirisha. That discussion was hot. Let's say the grace. Now may the grace of our Lord Jesus Christ and the love of God and the fellowship of the Holy Spirit be with us now and forevermore. Amen. Blessed evening. Be safe. Kesho tukimbie kanisani, si ndio? Kimbie kanisani. Alafu sasa kama kuna class afternoon. Akampanelo tukikuja class tukue tushabarikiwa so that next week we push on well.